The post-lunch session, which is sponsored by HWL Ebsworth Lawyers and ABC Refinery. Sean Hardcastle is a partner in the national law firm HWL Ebsworth with over 15 years' experience as a corporate lawyer. He has extensive experience in equity capital markets, mergers and acquisitions, and corporate governance within the mining and resources industry. He's been involved in a broad range of cross-border and domestic transactions, including IPOs, reverse takeovers, secondary capital raisings, joint ventures, and corporate restructuring. To talk with us about recent trends for exploration companies, please welcome Sean Hardcastle.
Thanks very much for the introduction. I know no one generally likes listening to lawyers speak, so I'll try and get this in under 15 minutes, and hopefully you guys can take one or two things away from it. So today I want to touch on briefly at the start capital raisings in the IPO market that we saw in 2020. I think when COVID first hit in full force and effect in March, the impact on equity capital markets was significant. I don't think anyone pictured what was going to happen thereafter in terms of the volume of capital raisings and IPOs that we saw. I'll discuss whether we believe these capital raisings and IPOs will continue in 2021 in the resources space, particularly in the context of spin-outs in terms of what we've been seeing in recent months. And are you M&A ready? I'll finish off with. So I think the market's been long awaiting a flurry of public M&A, and I'll discuss my thoughts on where we think the M&A market is heading, particularly with Northern Star and Saracen kicking off proceedings last year. So if we look at the run of IPOs over the past few years on the ASX, you'll see that 2017 and 2018 are obviously fairly consistent, particularly in the resources space. 2019, there was a large dip in IPOs, and particularly in the resources space, we saw a lot of healthcare, cannabis and technology companies listing, and also a number of backdoor listings or recompliance transactions. Then last year, we saw 86 IPOs. 65 of these were in the second half of the year, 26 from WA, and 21 of these are in the second half of the year and 18 in the resources space. If we look at the price performance of ASX IPOs, they significantly outperformed the broader ASX 200 index. And in particular and relevant here, the metals and mining IPOs achieved average gains of over 50%. So why were there so many capital raisings post-COVID? At the end of March, the ASX and ASIC introduced a series of measures to facilitate emergency capital raising relief. They gave entities an extra 10% placement capacity under Listing Rule 7.1. They removed the one-for-one offer ratio cap for non-renounceable entitlement offers. They gave companies the ability to take a 4-day trading halt in connection with a capital raising. And they increased the number of days that an entity could be suspended for and still have the ability to issue a cleansing notice. All of these relief measures ceased in November 2020. This slide is from the ASX and refers to secondary raisings by various global exchanges. And by secondary raisings, we mean placements, share purchase plans, and rights issues. In the 5 years prior to 2020, ASX averaged around $40 billion a year in secondary offerings. This year, or in 2020, $66 billion was raised, including IPOs, the largest amount in over a decade, as many companies shored up their balance sheets during the crisis. In global terms, and as you'll see, ASX ranked 5th by secondary capital raised and 1st by number of deals out of over 90 exchanges. So what do we see in the year ahead? The ASX, particularly the Perth office, is inundated with listing applications, particularly IPOs and spin-outs into IPOs. We're seeing a large number of exploration companies listing on the ASX through a vanilla IPO or spinning out non-core assets. We're certainly seeing a lot less recompliance transactions. Some of the new ASX rules that govern those transactions are making their value diminish. The end of the regulatory relief that was provided due to COVID is also likely to reduce the volume of capital raisings, and also due to the fact that a lot of these exploration companies are now well funded with strong balance sheets. We see the long-awaited M&A activity to be a key theme for 2021 and beyond. In recent months, we've seen increased interest in companies looking to spin out non-core assets into a fresh IPO. Listing Rule 11.4 provides that an entity must not dispose of a major asset if it is aware that the person acquiring that asset intends to offer or issue securities with a view to being listed. The prohibition on spinning out a major asset doesn't apply if the shares are offered pro rata to existing shareholders, including any that are retained by the listed entity, or shareholders approve the transaction. The policy underpinning this rule is to ensure that an entity's shareholders are treated fairly in any spin out and have the opportunity to participate in any premium that may result of the spin out. Listing Rule 11.4 is only invoked where the entity disposes of a major asset. Now, this term isn't defined in the ASX listing rules or the guidance note. ASX has adopted 25% as an appropriate benchmark for determining whether or not an asset is a major asset, and will generally regard an asset as major if its disposal will result in a decrease of 25% or more of the following on the screen. Probably the most important and key metric there is that ASX look at is the consideration. In most cases, this will be the metric that causes shareholder approval to be obtained. We've seen instances where ASX refer to the value of the spin-out entity's proposed capital raising in connection with the IPO as a metric which would lead them to apply this rule. So in short, ASX apply this rule broadly. There are a myriad of different ways in which a spin-out can be structured. These are the terms that ASX use when they're evaluating a spin-out, or self-explanatory, but relate largely to a standard spin-out where there's a pro rata distribution to existing shareholders, a non-standard spin-out, which is effectively just a straight IPO where there are no securities retained, a full spin-out where the listed entity itself does not retain any securities, or a partial spin-out where they do. If Listing Rule 11.4 applies to an entity's spin-out, prior to announcing that spin out, an entity must seek in principle approval from the ASX, confirming that the transaction is fair in all circumstances. ASX take into account a number of factors. The reasons for not proceeding by way of a standard spin out. If one of the reasons is the relatively large number of small holdings a standard spin out would create, ASX will look favourably where the entity is willing to offer a top-up right or facility to permit shareholders in the listed entity to invest a minimum amount to participate. Will there be a priority offer to existing shareholders? What's the percentage, if any, that's retained by the listed entity? What's the allocation policy boards are adopting for any oversubscriptions? And importantly, does the transaction appear to confer benefits on related parties, their associates? ASX have concerns where related parties or their associates receive securities in the spin-out vehicle in consideration for promoting or facilitating the transaction, or where they're given an opportunity to underwrite or sub-underwrite the transaction. If ASX determine that shareholder approval is required, ASX will expect to see a detailed notice of meeting, which needs to be approved by 50% of shareholders. They'll want the notice of meeting to include how the spin-out will be effected, a description of the assets, including evaluation of those assets, what's the impact the spin-out entity is going to have, including consolidated assets, equity interests, and also annual expenditure, what are the dilution impacts and the tax ramifications for the shareholders, and what's the reasons the board considers that affecting a spin-out without the offer going pro rata to existing shareholders is still in the best interest of the company and its shareholders. In terms of the IPO requirements for the spin-out vehicle, these are the same as a vanilla IPO. Effectively, your time frame, you're generally looking at 3 to 6 months, a full form prospectus. The company is going to need to satisfy either the assets test or the profits test. 90% of companies will satisfy the assets test, which means they've got a market cap of at least $15 million or $4 million in net tangible assets after deducting the costs of the offer. The company must ensure that at least 20% of its main class of securities are freely tradable to satisfy the free float requirement. Cash payments to vendors. Now, ASX will look closely at any cash payments going to vendors, whether it's coming from the listed entity, a related party, or another vendor. Generally, cash payments from an IPO cannot be made to related parties or vendor promoters unless that cash is reimbursement of development expenditure. A vendor may be considered a promoter where they are the only vendor, or they will have a substantial interest in the entity upon listing. When I say substantial, generally ASX are using 5% as their threshold. I just want to touch on briefly an update to Guidance Note 19 was made in September 2020, which contained important changes that affect both IPOs and planned M&A. Effectively, if a company is applying to be listed and it proposes to have performance securities on issue that equal 10% or more of the ordinary shares on issue at listing, they must go and get an independent expert report. You'll see the definition of performance securities is extremely broad and captures any form of deferred consideration where securities may be issued. Even performance options, if there is an exercise price, will still come under this definition. The same 10% threshold also applies to an entity that's already listing and is looking to transact on an acquisition. So whilst the performance securities has a broad definition, it won't apply to cash settled performance rights. It won't apply to performance securities issued under an employee securities incentive plan, and it won't apply to employees or directors as part of a remuneration package. So given this new 10% cap and requirement for an IAR, we are seeing most companies look to do cash settled rights as opposed to securities so that they can go above this 10% threshold. So I just want to finish on M&A developments as we see them in 2021. The public M&A market has matured during the second half of 2020 and its navigation through COVID-19 uncertainty, particularly on the East Coast in other sectors. And we think that mining resources transactions can take guidance of how these deals have managed that COVID risk. There's still a market for the brave or the familiar. The Northern Star and Saracen tie-up reminded the market that well-planned M&A and the rationalisation of mining JVs can unlock synergies for shareholders, justifying nil premium combinations. Indeed, most of the announced M&A deals during the second half of last year entailed highly logical combinations with clear synergy cases, lower due diligence risks, or minority positions such as Northern Star and Saracen and IGO at Greenbushes. Aside from these situations, it does remain a market for the brave acquirers, given a combination of earnings uncertainty, lack of guidance, and the swirling liquidity. Interestingly, private equity and Australian super funds have recognised the break in the investment cycle, picking off distressed assets ahead of public market recapitalisation processes, as shown by RCF and AusSuper's support of the Pilbara Minerals bid for the Artura assets. Earnings guidance remains tricky, but production guidance is available for mining deals. Capacity output itself doesn't seem to have materially changed, with profit increases by mining companies largely due to commodity price fluctuations, with the price of gold increasing by more than 30% and iron ore rising by more than 40% since the start of 2020. We expect increased M&A activity for WA resources companies. Despite government's efforts to crush this virus, the fact is we're still hiding under the covers and the virus may further spread, so we need deal flexibility in local resources markets to bake in adjustment events for COVID-19 impacts on mine production results or mining services revenues to allow public M&A transactions to straddle uncertain business impacts during long implementation periods. We see secondary raising starting to slow, which indicates boards are more comfortable with their balance sheet positioning. However, explorers who have raised capital and not hit pay dirt may be forced to execute on strategic M&A in order to keep some momentum going for their shareholders. There's also been cast doubt in the courts in recent times as to whether or not a director can recommend that they vote in favour of a scheme where that director will receive a benefit in connection with the scheme's implementation. We're now confident in that position, at least in WA, that the local judicial opinion has endorsed what is deemed the fact-sensitive approach to directors' recommendations in a range of similar decisions. There needs to be a reasonable commercial rationale for the benefit, and proper disclosure must be made, but shareholders will ordinarily expect their directors to make a recommendation, even if they are going to receive a substantial benefit. And lastly, FIRB analysis for targets remains critical to assess the bankability of offer terms and to utilise the regulatory safe harbour for hostile bids, particularly if the target is in the opaque critical minerals space or the bidder has links to foreign government investors. Also for M&A, white knight or competitive sale processes, timetables for solicitation of competitive transactions are being pushed out by COVID-19 complexity of site visiting scheduling. Whether you like it or not, your company and its assets will be a target of someone's, whether friendly or hostile in nature. Board should be cognizant of this and its directors' duties. Preparation of appropriate takeover defence manuals, draft leakage announcements, and ultimately protecting shareholders' interests should be front of mind for boards and staying ahead of the game. Thank you.
Sean, do you have a stand here? Are you around?
Yes, we're basically right in the middle where the food was.
Okay, because I'm sure there'll be questions arising from that, particularly given that you've introduced a note of paranoia there towards the end. Thank you, Sean. Karen Patterson is the founder and managing director of Trig Mining. She's a recognized industry leader with more than 20 years experience across the entire mining value chain. Ladies and gentlemen, please welcome Karen Patterson.
Thank you, Jerry, and good afternoon, everybody. Have you ever thought about the minerals your body needs to sustain life and how they may arrive in your food in today's modern agricultural practices? I'm here to talk about #mining for farmers and how at Trig Mining we are looking to sustainably produce the essential mineral fertiliser, sulphate of potash, to provide two very important nutrients for life, sulphur and potassium. Well, we are the new kids on the block. And if you looked at one of the earlier slides in the previous presentation, we are the one IPO of 2019 in Western Australia. But we've been very busy in those 16 months, and I've got a lot to tell you today. We are focused on a company-making project right now called Lake Throstle. And today we announce the exploration target on that project, and it is big. It is high grade. And it has genuine potential to underpin a multi-decade sulphate of potash project. We have an extensive air core drilling program underway that we've recently expanded based on these results. And we're anticipating having our maiden resource for this project next quarter. And being a mining engineer, it's not just about the exploration at this stage. We're already focusing on how we're going to go about building this. So the economic studies are already underway. We've already got a resource elsewhere too. So in this time, we're looking at not just one project at Throstle, but also the potential to expand on that as we move down that production chain and include our 6 million tonne Lake Raisin project, which also has upside to it. We've got all of this in a company with a market cap of $12 million, with plenty of upside and numerous value-making catalysts to come. So that announcement, that exploration target has us very excited because it is substantial. This is a project that has never had any drilling done until we got out there in July. And it's taken a fair bit of innovation. You can see in the top corner of our announcement there, a helicopter, to drill this project because it is of substantial scale. The one tenement that we're working on at the moment is over 300 square kilometres, but it's a project of about 1,000 kilometres. We have 70 kilometres of Paleo Valley in this exploration target, with 112 kilometres in our tenements. So we've got further upside yet to come. What we're talking about here is a drainable resource. So sulphate of potash is electrolytes essentially dissolved in the hypersaline brines of the goldfields. So we're exploring for water within that Salt Lake and Paleo Valley system. And what this exploration target tells us is the scale, it's going to be big, it's going to have a long life when we bring it into production, and it's got the grade to do that. So the corporate overview, having listed just 16 months ago, we do have a very tight capital structure with 80 million shares on issue. 30% of the company is owned by the top 10 shareholders. And with 3 million in the bank and a market cap of 12, that does make us a very compelling investment case. Where are we? We're in the backyard. I'm a School of Mines graduate, mining engineer, so this feels like I'm quite at home working in the goldfields. It's the northeastern part on the edge of the Gibson Desert, about 170 kilometres east of Laverton. Lake Throssell is shown in green, and that is our primary project, and has an added advantage of sitting across the Great Central Road. And this is important because this is going to become the Outback Highway, and the various state governments between Western Australia, Northern Territory and Queensland is bitumising this road at the moment. So we're quite likely to have a bitumen road right up to our mine gate. We also have a fabulous neighbour nearby called Gold Road with the project Gruyere. We're a gas pipeline, and there's an airstrip there. And also Laverton. Laverton is a very busy, small goldfields town supporting mining infrastructure. So we've got a lot of commercial support to do this. And also the Chukayilla Roadhouse up the road from the project has been a fabulous support as we're getting out there and doing this early phase of exploration. So access to markets, into the local state, into the East Coast, and also export. We've got the railhead there at Leonora and potential to ship out through Esperance. All up, we've got over 1,500 square kilometres of very strategic tenure. These exploration licences have got sulphate of potash on them. We've rationalised the tenure and we're very, very focused on these two projects. So why sulphate of potash? I had to learn this as a mining engineer growing up in a hard rock environment, thinking that metals was pretty much all mining was. But this is an incredibly important part of our food supply chain. Potassium is essential for all living things. It promotes in plants resistance to disease, to drought and frost. It improves the quality, taste and appearance, and is required in large quantities for proper plant growth and the high yields that our farmers are looking for. Sulphur is also incredibly important in the part of the photosynthesis and the chlorophyll formation of the plants. It increases crop yields again and produce quality, but it doesn't have any deleterious elements. The main competition that what we hear about in the market is muriate of potash. That is a bulk commodity, but half of every tonne of that product is chloride. And that contributes to the salinity of the soil, the pH of the soil changes. Then farmers need to then put another product on the soil to try and counteract the impact of it. Whereas if they could afford sulphate of potash or have access to sulphate of potash, because it is a very constrained market, they would have a far better sustainable outcome for their soils and their crops. So the demand profile is there. We all eat food. Our population is expanding. We have reduced areas of arable land, and we need to produce greater quantities of food from less and less area. All up, it markets about 7 million tonnes and growing at 3% per annum. Also, from an economics perspective, to build a sustainable mine, it's great having this really fantastic product that can potentially be produced using solar evaporation, but it's also about the economics. And by the natural endowment of these projects having solar evaporation, they come in at the lower end of the cost curve. In a market that doesn't have great cycles around prices, it's a very steady price environment. That Mannheim process is a secondary chemical process where they force manufacture sulphate of potash by bringing in sulfuric acid and muriate of potash and putting it into a furnace and heating it to 800 degrees. And the byproduct of that is hydrochloric acid. So for every tonne of sulphate of potash we can make, we've got 1.2 tonnes of hydrochloric acid that needs to be disposed of. So this is very taxing on the environment and very costly. So it creates a price floor in that economic cycle for us, well above the average cost of production from brines. So these projects do generally have a really good margin and sustained margin. There's no price cycle to be concerned about, because if there's, we need more and more of this product and we need ultimately more brine projects, but they just don't exist. And we make up the rest of the demand profile through the Mannheim process. So importantly, Triggs projects. It's really hard for me to show you the scale, But this is huge. This is from looking in one direction from the helicopter, but I spent a minute in the helicopter the other day just doing a circle, taking a video, just to try and capture the scale. They're drainage systems. They're paleo valley systems where the minerals have been dissolved over many millions of years and concentrated in these brine systems. So Lake Throssell, all of the lake surface is mineralised underneath. It's the water that sits just below the surface. We've had results there of up to 14,800 milligrams per litre, which is really high-grade sulphate of potash. And this is just the beginning of the story here. We're now drilling the air core program. That's the rig out there on the lake at the moment, targeting the basal aquifer. So this is a cross-section of the work that we've been doing. The air core program started in December. And with initial results from that is how we've come up with this exploration target, which is quite narrowly defined because particularly our grade is very, very consistent. And it's looking like we've got a big paleo valley system that's up to 2 kilometres wide in the bottom where the basal aquifer is residing. So we'll have a superficial aquifer which we can target with trenches in the surface of the lake, and then the bores targeting the basal aquifer underneath. The satellite project there is Lake Raisin as well, 6 million tonnes. We've got another tenement that's just been granted to the west, so we can expand on this. This project is about 100 kilometres south of Throssell. And we're looking at how we can bring this together as a production hub. But Lake Throssell itself is shaping up to be something that really will stand on its own. This is just the cherry on the cake really for us further down the mining plan path. So to put into perspective our market cap, this is the sulphate of potash peers that 2 of them have projects under construction. One is looking at financing and the other 2 still doing some exploration and other studies. But Trigg Mining is really at the beginning of this story. We've got a lot of energy and motivation to rapidly take this up the value curve. We've already identified 1 resource. That exploration target will translate into a resource, a second resource, next quarter. And this is really about building these a long life sustainable sulphate of potash project. So in summary, this is a very low risk jurisdiction. It's been in our backyard. We've been out there spending most of 2020 in the field, other than a few months with COVID restrictions. It is a strategic land holding. It's 100% owned by Trigg. We have no third-party royalties at all. Lake Throssell is rapidly evolving. As we drill more holes, we get a greater understanding of just how amazing this project is. It is a high-grade discovery. It is large and has potential to have a long-life, low-cost primary source of sulphate of potash for Western Australia, and global food security. We are really well supported by infrastructure out there, with that road being upgraded to a highway, rail, airports, airstrips, gas pipelines. We've got what we need out there. Lake Raisin adds a cherry on the top of our cake with another 6 million tonnes of resource that can be expanded, and potentially the grade to the west will increase as well. We have strong global demand fundamentals. We are all going to continue to eat. We need more food. We need nutritious food. Trigg is highly leveraged to growth with our market cap at 12 million and 3 million cash in the bank. And we have a really motivated, experienced team. We know how to build projects, and we want to do this and do this well. So if you'd like to know more, we're at booth 96, then come on by. Thank you.
Thank you, Karen. Thank you very much, Karen. To Saturn Metals now, where Ian Bamborough rejoices in the title of Managing Director. Ian is a geologist with over 20 years leadership experience in the mining industry. He's been with Saturn Metals since September of 2017, when he came on board to lead the company through its successful IPO process. He developed his career with Newmont Mining Corporation and was more recently Managing Director of ASX-listed Spectrum Rare Earths Limited. Ian has previously served as the Director on the Northern Territory Mining Board and currently holds directorships with private exploration and mining companies. Please welcome Ian Bamborough.
Thank you very much, Jerry. Thank you for the introduction. A little bit of a potted history on Apollo Hill and Sand Metals just before I start the presentation. The deposit itself, Apollo Hill, was originally founded about 34 years ago, and it's worth noting the first 31 years there was about 500,000 ounces found. In the last 3 years, we've added another 439, so practically doubled that kind of historic resource. The company was floated, I think, March 2018, so we're just coming up to that 3-year mark in about a month's time. Where are we? Heart of the Wiluna Norseman Greenstone Belt, right on the Kilkenny Shear, the central strategic land position in perhaps one of the most prolific greenstone belts in Australia. There's Apollo Hill at the centre of that ground package, 1,000 square kilometres, 100% owned, and I think strategically in a fantastic place. The other thing to note on there, I'm going to step away from that because I'm getting feedback. Great infrastructure, great gold infrastructure, about 35 kilometres from the gas pipeline, 2.5 hours drive north of Kalgoorlie, so a great place to build a mine. Key points on this slide, I think one, an extremely strong supportive register. About 45% is held by long, technical, sophisticated institutions, which is quite an honour, I suppose, for an early stage exploration company. With Shaw and Associates, I'm sure that gentleman's in the audience today, is a prolific history of finding, developing and building ore bodies in Western Australia. And I think the other thing is a really strong cash position. We've never gone into an exploration season in such a strong position with about 12.5 million in the bank. And I always say to the exploration team, I know what we've done with 1.5 million or 3 million. So I think we're set up for an excellent year. The deposit itself, there's no getting away from it. It's big tonnage, low strip, simple pit, but low grade. And it works for a number of reasons. One, of course, is its geometry. The width there is about 500 metres wide, and the widest part of that pit is only about 1.4 kilometres long. So that affords us, excellent mining geometries and strip, and perhaps differentiates us from a lot of other deposits. The other one is its simple metallurgy, which I'm going to come on to. But just in about 3 years since listing, about 439,000 ounces, we've pushed the strip ratio down to something very respectable, about 4:1. And of course, 60% of that is now in indicated. And in fact, the more sort of, if you want, reserve style pits, it's about 70% indicated. Within that, there's still a high-grade architecture or a higher grade architecture. And I think it's worth noting in the last 3 years, we've seen some of the best intersections we've ever seen in that kind of 34-year period. Some of them up there, I guess 10 out of 10 at very respectable depths within that gold system. And that picture's up there. If I can pick the laser to show that, there's plenty of sort of these higher grade loads and 3, 4, 5 grams available at a regular interval through that deposit to help feed any sort of processing. We have in the past focused our efforts on higher grade plunging shoots. The last year has seen us expand the resource quite reasonably. And this year, I think we're off to a cracking start again with some fantastic results. Perhaps a step change above the resource grade. Our last announcement had about 18, 19, 20 results in, and I was struggling to decide what to put on the front page. What have we been doing? We've got 100 holes pending as I speak now, since we started in January. And some of those will be coming through quite quickly despite the kind of lab backup, but it's also about the speed and I suppose an aggressive stance on the drilling at the start of the year. A few different strategies there. you can see we've actually gone and taken a couple of panels in the deposit and grade control drilled them. We've done that for a couple of reasons. One, I want to show the continuity of this deposit. Very nuggety gold deposit, big coarse gold nuggets, and that tends to provide quite spotty numbers. But what we have seen in the past is as we drill this thing out, we've actually seen the grade come up because of that nugget factor. And it's a pure probability. The more holes you drill, the more of those nuggets you're going to hit. And I'd like to demonstrate that with the work we're doing here. The second one is that's providing us an excellent bank of samples for metallurgical processing. And some of the recent resource work we're doing is showing we've got some beautiful options for processing this in a very simple way. Some fantastic intersections there in the north just produced. And I'll note that they're 2 meters down and 6 meters down. We've stepped straight back in there. New deposits are happening at Tefnut and Wajib. And then you can even see a hole down there where we've stepped out quite bravely about 700, 800, 900 meters south of the main deposit, where we think some of the plunging shoots in Apollo Hill are going to come to the surface. So watch this space. Now on that last point, that step out of that 700, 800, 900 meters, I'll sort of make this point. As we've done the resource modeling, it became very apparent that there's a beautiful plunge to that system that we'd never drilled, either to the south under the lake or even up to the north under the lake. So that drilling's happening in earnest now. And I'm happy to say we've seen some nice looking geology in that hole there. The next plan is to actually infill. But what I really want to do is demonstrate, I suppose, a capacity to make that next step change in that deposit. The resource at the moment, at just under 1 million ounces resource, is probably about 65% of the way to a hand on heart, make some money, decent capital cost mining reserve. And I want to quickly show the potential to make that next step. So we're only going to do that by exploring. Beyond that, this is more of a cross section. And I think it's another way of looking at the ore body. And it's worth noting, again, like I said, in the last year, we've seen the 5 best intersections we've ever seen across this entire greenstone belt come up in this deposit. And you can actually start to see the high-grade shoots coming together now at some very respectable intersections and widths within that big low-grade system. So there'll be a focus on exploration there as well. We step out to the edges of the system, which is, if you look at these air core holes, which are still very sparsely drilled, probably about 1 kilometre wide, if not a little bit more. And there just is no exploration. So what are we going to do? Open, open, open. We're actually going to go for the jugular. I think some of the best intercepts we've seen this year is when we've stepped out under the system. So again, those holes are starting very soon. Back onto the metallurgy, because I think the one thing we have to do here is differentiate this deposit from the normal, or I suppose what everybody's used to. And it does sit in quite a unique position, and it's because of this simple gravity-focused mineralogy. All the gold, which you can see in here, is these quite coarse gold nuggets sitting in the white quartz veins. And what that means is that with cheap physical processing, you see about 60% gravity gold. Now that is upper quartile at least, if not upper 10th percentile in the world, so cheap physical processing. Even at the coarsest commercial grind size of 300 micron, we're seeing recoveries in the 92%. That really means lower energy use, lower grinding, bowl use, and lower cost. And that's why this deposit sits in quite a unique space, all with very low cyanidation, no preg-robbing materials, no carbon, no copper, no arsenic, nothing complicated. It's about as simple as it gets. We have seen the potential for ore sorting as well, perhaps in some of the sweeter spots. Not sure we're going to scale it up to the size of the deposit this is going to end up at. The other option, I suppose, is when we looked at heap leach characteristics. Absolutely delighted to see recoveries in the high 60s and 70s in some of the column tests. And most importantly, in a very quick residence time, within about 21 days. Now, most people avoid heap leach in WA because there's a lot of clay. This is fresh rock. no agglomeration needs, no sticking it together, good percolation through the piles, and importantly as well, very flat grade recovery curve. So even at the lower grades, I think 0.1, we're getting about 80% recovery. 0.37, I think we're at about 91. And that is quite unique because it means if we can even pay to move that dirt out of the pit, even if it breaks even, I'm essentially pushing the stripping ratio down. My unit costs, I can mine this at a bigger scale, push my unit costs down, and again, we're ahead. And what we found in the recent grade tonnage curve is there's a much bigger opportunity out there if we can take this metallurgical test work and take it to the next level. And I think a serious step change could happen. Now, some of the biggest deposits in the world, Kinross's Round Mountain, for example, their resource at the moment is about 100 million tonnes. Their head grade's about 0.64, but it works because of this simple met. And I think we have the potential here, if we don't go for the big mill, or we do a hybrid, or we do something to have quite a special, low-cost, major operation. Beyond that, deposits never really occur on their own, and the exploration team's been out about 3.5 kilometres to the east of Apollo Hill. We've got these beautiful geological structures we've picked with recent gravity work, recent magnetic work, some fantastic explorations, kind of 10 at 10 again out there. I actually think these are in the alluvial, like deep lead alluvials. And what we want to know is where is that coming from? There is a drill program underway right now with Aircore where we're getting across these structures which have never been drilled properly and really opening up that corridor. And I think that's something to watch for in the coming weeks. Beyond that, we've had a look at the deposit scale, we've had a look at the camp scale, and now let's have a look at the belt scale. There's your 1,000 square kilometres. And these drill holes on this screen are really about stepping out and looking for new gold systems. 65% of that ground package has never had a drill hole. There's no soils, there's no drill holes, there's nothing. So I think it's a phenomenally exciting opportunity to be basically taking one of Australia's major greenstone belts and to walk into this kind of terrain. And again, for the first time this year, we've got that $12.5 million exploration budget and really give this some stick. I think it bodes well at all sorts of different levels for Saturn. And one more. Last year, we joint ventured into the West Wyalong Goldfield in New South Wales. West Wyalong's a bit special. It was last mined and explored properly in 1915. It sat there untouched. It produced between about 1894 and 1915 at 1 ounce per tonne, which is quite spectacular. Its best year of production was in 1911, where it produced 50,000 ounces at 3 ounces per tonne. Very high grade, very rich deposit. Shallow by modern standards. We've modelled these old workings up in 3D. We've got some quite precise targets. It'll be quite a binary exploration program, but we expect to spend about 500,000 somewhere between March and May this year to give this a test and really prove concept. And that could be a game changer for the company again. Bit of a busy slide, but the 3 key points I'd really like to make is a lot of meters planned in the next 6 or 7 months. At the end of that, I'll still have a healthy bank balance. And the drilling is very much about, as I've shown you on some of those slides, step out that next scale of discovery and that next scale of opportunity, be it at the deposit or be it across the belt. It's worth noting that's our exploration manager and a team there, and the drillers, and they're all females. And I think that's something to be very proud of. Lots of female geologists on the team at the moment and doing a fantastic job. And there's the standard disclaimer, which you don't really want to read, or I don't want to read to you. And thank you for the opportunity.
Thank you, Ian. Andrew Radonjic is a geologist and mineral economist with over 30 years of experience in mining and exploration with an initial focus on gold and nickel in the Eastern Goldfields. Andrew has fulfilled a variety of senior roles, which gave rise to 3 gold discoveries, totaling in excess of 3 million ounces in resources and resulting in 1.5 million ounces being produced. Since 2006, Andrew's been an executive director with Venture Minerals, which he co-led during the discovery of the Mount Lindsay tin tungsten deposit. Please welcome Andrew.
Thank you, Jerry. Good afternoon, ladies and gentlemen. It's great to be presenting here today at the 20th Explorers Conference, and what a fantastic achievement it has been by the Vertical Events team. Today, I'd like to talk about an exciting year ahead for Venture Minerals as it becomes a producer and an explorer, with the Riley Iron Ore Mine rapidly moving towards its first shipment next quarter, whilst drilling its Golden Grove North and Coolum projects, and while Chalice is recommencing exploration activities by earning into our Southwest project, looking for another Julimar. With Venture, you truly get 2 companies for the price of 1. So, disclaimer. With our recent funding back in January, we're now fully funded, and we've now got a clear line of sight towards the first shipment in the second quarter of 2021. So we're madly beavering away in workshops around Tasmania and one in Queensland about getting this equipment ready and getting onto site and building it starting next month. Recently, we had some exploration success at Golden Grove North, where we got up to 7% zinc from our maiden drill program. We also got 20 grams of silver, 1.5% copper and 2 grams of gold. Narrow, but certainly sweet, and drilling was about to recommence there in the next week or so. Trench results are announced early this year, 31 metres at a gram at Coolum. I don't think there's a drill hole within about 5 kilometres of this project, so it's a pretty exciting opportunity. We're currently drilling underneath those trenches. Chalice, which I touched on previously, they have to spend $300,000 on this project by July this year, so expect some news flow from that. And if you thought Mount Lindsay was forgotten about, then you clearly didn't see the tin price go up by 18% last night. The project is a tin tungsten project, one of the largest undeveloped tin assets in the world. Sort of a $75 million company. We were, I suppose, $10 or $15 million a couple of years ago. We've had a huge success with exploration and obviously pushing forward development of Riley. So with that $10 million raise, we're cashed up to build Riley and also to do a little bit of exploration in the meantime. Same team that started this company in 2006. So hence all that experience of Riley and Mount Lindsay, which we did all that work back from starting in 2007, is still within the company. So one of our greatest assets. And that allows us to take these opportunities when the cycles come around. Going to the Riley Iron Ore Mine, located in the northwest of Tasmania. We have all the permitting done for the mine. We have a sealed road all the way, 120 kilometres to the Port of Burnie. So all the permits in place, so ready to start mining straight away. That's it. It's 1.5 metres thick. It's 0 strip ratio. It's been previously logged. In fact, a bushfire went through there a couple of years ago, so it's even clearer for us. So very straightforward deposit, very similar to FMG's Super Special Fines product. So with that funding now, we're building a wet screening plant. You can see there's construction happening there in various parts of Tasmania. The electrical systems, the plant, we've got all the equipment. It's been sourced and getting built around the state and the rest of Australia. Fergus Campbell's just joined our team. So he's a lead technical consultant. His specialty is startups, and he's done a fair bit of work in the iron ore game. So it's great to have Fergus along, helping us out during this very important phase. So the economics of the project, well, they're pretty exciting at the moment, but we can state that at $90, this project made $30 million. We're currently trading around 160. And those milestones, well, they'll keep on coming ahead of us as we go. Next month, we'll be looking at construction, and then that'll be about a 4-week period, and then closely followed by mining, first haulage and then shipment in probably the middle of Q2. It's an exciting opportunity for the company as it graduates from being an explorer into being a producer. But let's not forget about our exploration success that leads us where we are today. Golden Grove's a great acquisition. I think it cost us about $50,000 in cash and shares back in 2018. And I think the number of JV offers I've had for that is almost countless, but we're in it, if you like, we're in the head frame, the shadow of the head frame of Golden Grove, which is one of, I suppose, the best VMS deposits in Australia. It has an endowment of 100 million tonnes. You don't see much about it. They're very much under the radar. We're at EMR Capital at the moment, who are doing fantastic effort. They've tripled the reserve base. They've doubled the output of the mill, or just about to double the output of the mill, and they're hitting sort of 30-metre intersections at 30% zinc, about 1.4 kilometres down. So that thing keeps delivering, and that's Scuddles and Gossanhill, and they're only 5 kilometres apart. So there's about 13 deposits there. So it's a great testament to the potential of Western Australia to host these deposits. We've done it. We've grabbed the asset. It was about 900 drill holes. We did a lot of data mining, and we started doing some rock chipping and sampling, and got 23% copper, 3 grams of gold at surface. And we started getting, doing a little bit of EM. So we've got Vulcan West, Vulcan North, in addition to Vulcan, and the Neptune prospect. So the more work we did with the data, we started seeing the VMS signatures pop out from previous explorers. Dalrymple Resource, for you guys have heard, back in the 90s, they actually called this project Golden Grove North as well. We only found it out late in the piece. But the signatures there demanded attention. And then we did some, further EM work. And then we did an acquisition, very importantly, called AUKUS, which sort of sat between our Vulcan West and Vulcan North targets along the same trend. And what we found is that we started to get some sort of continuity in terms of geology. So we drilled the RC holes back in October, November last year, and we were following up underneath the AUKUS intersection at 22 metres at 0.8 gold, 0.6 copper, 1.3 zinc. That was from an iron ore company. I don't even know what I sampled it because I never followed it up. It was an absolute crying shame, but allowed us the opportunity to drill straight underneath it. And in the meantime, we continued to do ground EM, trying to develop more targets that cover the area whilst we're drilling. So this is the result of our first program at AUKUS, and you can see we've got some pretty nice results. We've got up to 7% zinc, as I said previously, a couple of grams of gold, 1.3% copper, 22 grams of silver. Narrow, but the grade is there. The geology, we've ticked the box to that. EM equals sulfide. So it's really a matter of getting greater thicknesses here. We've got no drill holes within 1 kilometre to the north and 300 metres to the south. So it's pretty exciting. The RC rig struggled to penetrate any deeper than 200 metres because of the water flow, very similar to what happens at Golden Grove. So the diamond rig will be turning up there, like I said, in the next few days, and we'll be seeing the result of that. So we're pretty excited about that program coming up shortly. And in addition to that, we picked another half a dozen EM plates. These are stronger. They're twice the strength of what we have at AUKUS. There's no geochemical signature at all. So we'll be putting holes in all of these purple or magenta coloured plates in the coming weeks. So expect some news flow from there. Moving on to our Coolum project. 8th of January, we put out an announcement. We started drilling at Coolum. And this is a very interesting soil anomaly which BHP identified back in the mid-80s. They also found a Tampia mine, which Explorer paid $70 million for back in 2018. And BHP had about a 1.5 gram rock chip here, and incoherent sort of soil anomalies using sort of partial leach techniques. We've got a coherent soil anomalies up to 0.4 of a gram of gold, which is pretty exciting. Didn't know which way to drill, so we dug some trenches. So there's no drill hole within 5 kilometres of this place, and that's a rab hole. And we got some sensational results, like 31 metres at a gram, 20 metres at 0.6. This is really in the middle of nowhere, pretty exciting. So we're drilling underneath those at the moment with diamond core, and so expect some results from that shortly as well. The reason we actually pegged this asset at Coolum, again, backtracking a little bit here, but we actually pegged it looking for nickel and PGEs. Some of the highest chrome values in the Southwest Yilgarn laterite database done by BHP exist not only at our Tor prospect, as well as Julimar, but also exist here at the Coolum project. So we're pretty excited by the nickel PGE, I suppose, prospectivity of this area, but we're also Pretty excited by the gold, and that was a bit of a distraction. So we'll focus on the gold for now and then get back onto the nickel PGE target. But it sort of allows me to segue a little bit into the Chalice JV. But Coolin is along this sort of mobile metamorphic belt that's been interpreted by other explorers, and Anglo-America pegged all around us here. So there's certainly some prospectivity to be tested later on down the line. But Chalice came knocking on our door not long after they discovered Julimar, and the reason they did that, and besides the fact that, you know, geology is similar, you know, there's metamorphic belt, we're in the southwest corner of Yilgarn, but this shot here, the mag signature is remarkably similar, and it's 20 kilometres long. We've got chrome-rich rocks, and what's really interesting about this, and if you go back and look at our history, is that we've already done the EM, which Chalice announced in October, which has caused their share price to go to $4. At the time of the joint venture, it was $1. So we already got 6.5 kilometres of EM targets down here. In fact, we have infrastructure that stopped us getting EM responses along here. So we probably have more in terms of targets. So we had 13 targets. We drilled 2 holes into those targets, and we got in hole 5 massive sulfide with 2.4 metres, there it is in the core, 2.4 metres at 0.5% copper, 0.05% nickel, 0.04% cobalt, and a little bit of gold and palladium. So remarkably similar, except back in 2018, we didn't know what it was. But the Julimar was discovered just 12 months ago. So they clearly recognised the potential and the similarity. So, like I said, $300,000 to be spent on this project. It's already well advanced, so expect them to get to drilling quite quickly. Back to Tasmania, and very topical with the tin price going up today. The Mount Lindsay project's only 15 kilometres from the Riley iron ore mine. The money out of Riley will be used to fund the construction of Mount Lindsay. A little bit about tin, and I suppose what's happening now at the moment. It's the 4th industrial revolution, the Internet of Things. These are coined a few phrases. The green industrial revolution. It's all led by technology, which needs to be, you know, converting our economy to be electricity based, and tin is conductive and synonymous with all this. Solar cells, wind power, energy storage, semiconductors. The world is running out of semiconductors. It's stopping EV production as we speak, and that's causing the tin price to go up. So it's a pretty exciting time. Maybe it's the time of the sun for tin. It's solder, which is probably half its use in every bit of circuitry. During COVID, people have been buying more laptops, phones, etc., more electrical devices. We're going to see the rollout of 5G. We're going to need more tin for new electronics for that. EV means 30% more tin will be required by 2030, and there's 5 times more tin in an EV, in an electric vehicle, than there is in a conventional combustion vehicle. So that's why tin will become very, very important going forward, as well as being lead acid batteries in the anodes of those, which I've also forgotten to say. But so EV demand obviously drive the assessment of Mount Lindsay back in 2018. So we had a bit of a go at doing this. We're looking at doing a smaller, higher grade operation, make permitting easier, get CapEx down to 50 million. We have in excess of 80,000 tonnes of tin metal already in a resource, JORC compliant, one of the largest undeveloped tin assets in the world. We've also got in amongst that 3.2 million metric ton units of tungsten, which also is quite significant. So we're going to focus on a high grade 5 million tonnes, running 0.4% tin, 0.43% tungsten, and also has 15% magnetite. So at these levels, that's a very economic scenario. And that's all based upon 83,000 metres of drilling. $35 million has been spent on this project already. We have 60% over in measured indicated categories. A BFS was completed in 2012 on this. So we're just picking it up and taking it to the next level. I'm going to build this asset with the money from Riley. We have a very high tin concentrate, 75%. It's outstanding. That tin price was yesterday's price, 25,000. It's now hit 30,000 overnight. So that's 220% higher than what it was at its lows in 2016. Tungsten's also gone for a bit of a run. You would have seen that funding with King Island Scheelite. And more importantly about this project, we've only been drilling what Aberfoyle did in the 1970s. So there's still a lot of exploration on this asset. And we've got 17 metres at 2% tin still to follow up. So here's an exploration geology map. There's Renison Bell. We have a fantastic target here along the same geology under an alluvial tin field with EM anomaly begging to be drilled. Exciting exploration potential, which we generated from our EM type work we did a couple of years ago. And there's the EM response down here. Plenty of Mount Lindsay type targets. We've got co-funding from the government for $200,000. As soon as the money starts rolling in, we'll start exploring again at Mount Lindsay. There's plenty of upside to this project. In conclusion, there's a lot happening obviously at Venture, but maybe we've got our timing right. And it's an exciting phase. We go into production at the RIU project. We're going to follow up our maiden drilling success at the Orcas in our high-grade zinc and copper results there at Golden Grove North. The trenching has got some very interesting results, so stay tuned for the drill results underneath the trenching. And Chalice, well, they'll be generating some news flow in the next quarter, no doubt, on the JV at Southwest. But now, more importantly, let's not forget about our Mount Lindsay tin tungsten project. Thank you.
Just a reminder that this book, Rocks in Our Heads, Stories of Exploration from Mineral Deposits in Exotic Lands, is available for sale. The editor, I beg your pardon, Andrew Drummond, is out at the registration desk. Stories from people like Rob Duncan, Manfred Marks, Brian Levitt, Lad Zass, Martin Spence, Wolf Marks, Prue Leeming, Tony Gates, John Nethery, Ian Plimer, Roger Craddock, and much more. And an interesting story about a pet dog in the Philippines who was befriended by a miner, and a half an hour later, that dog was served up as dinner. Yep, I just read it just then. Dreadnought Resources is a highly active West Australian-focused junior exploration company with a busy year ahead exploring gold, nickel, and copper discoveries. The company is managed by geologist Dean Tuck and his team of exceptional explorationists, backed by an even more exceptional board with plenty of skin in the game. Please welcome Dean Tuck.
Good afternoon, everybody. It is an absolute pleasure to be up here again representing Dreadnought Resources, and I look forward to sharing the story with you of what we have coming up over the next 12 months. And my thingamajigger's not working. Hey, there we go. All right. Disclaimers, with lots of ASX announcements, as is the new requirement. Feel free to read that. All right, so Dreadnought as a company, a bit of a background for those of us that haven't heard of Dreadnought yet. We've been around for about 2 years. We are a junior exploration company, market cap of around about $40 million, $2.5 million in the bank, with a track record of raising small amounts of money to deliver our programs. Because as the board and management of this company, we've invested $1.2 million of our own money. We own about 19% of the company, and we're very sensitive towards things like dilution. We are a junior explorer. We're here to make a discovery, and we have a lot of skin in the game. And I think I have the best board and the best team in order to deliver that. We have Paul Chapman, who's our fearless leader, currently the chairman of Dreadnought, Black Cat Syndicate, and Encounter, recently floated Sunshine Gold over on the East Coast, has a fantastic reputation and his track record with Silver Lake and Avanco in the past. We have the calm and cool Ian Gordon, who was the managing director of Ramelius for several years. Took all that wonderful money he made from Wattle Dam and took over Mount Magnet and set Ramelius on the path that it has today. And our technical guru, Paul Payne, who makes sure that I don't blow too much smoke up the board, and make sure we keep honest about technically and geologically what we're going for and how we're going about doing it. We got Jess Lyons and the team at Everest Corporate, making sure we dot our I's and cross our T's, and a young exploration team led by Matt Crow, with Nick Chapman and Luke Blaze, very young, very hungry. They know what an exploration discovery looks like, they know what it takes, and they're willing to get out there and do what needs to get done to make that discovery. I couldn't ask for a better board, a better team, and to top it off, we got some really good projects to go with it. Our projects span from up north in the Kimberley all the way down to the goldfields. Anyone who's done work or seen companies do work in the Kimberley in the past knows you have a fairly limited season. So we like to have our cricket season and footy season projects. So when it's dry, we're up in the Kimberley, and when it's wet, we're down in the Lara in the Greenstone belts. And we just added a new project, Mangaroon, which rounds off some of our climate and destination projects quite nicely. So our strategy and performance, we've been around for about 2 years. Like I said, we are a junior explorer. We are here to make a discovery. And so everything that we do is focused along that path. We put money in the ground to date. For the last 2 years, 84% of funds raised has gone into the ground. 2 years ago, we've had about 500% shareholder return. We have put out a steady stream of news flow, very honest and transparent news flow to let shareholders know what we are doing with their money, which is also our money. I want to make sure people can hold us accountable for what we're doing and are along for the ride for hopefully will be an exciting year ahead for us. Effective and efficient exploration, discovery, that's what we're here for. The Julimars, the Grusas, all the wonderful things that we see in the value that it creates. The value creates not only for the shareholders, but for the state, for the country, and for the people in the regions. So that's what we're here to do. We're here to make a discovery, and we're here to do that effective and efficient exploration, making sure we have a constant supply pipeline of good targets, and that we're constantly testing those targets as we're generating new ones. It's exploration, it's a high risk game and high reward. So we have to make sure we give us as many chances as we can with the funds that we have available. And along the way, license to operate becomes more and more important. Strong win-win stakeholder relationships with our native title parties, our pastoralists, we work very closely. Our contractors, are some of our biggest risks. People talk about technical risk and safety risk. We also have operational risk. Our drilling companies, Hagstrom, Ausdrill, our logistics group like Exxon Logistics, Southern Geosciences, we have a strong collection of stakeholders around us with strong relationships with them that allows us to get the jobs done on time and on budget, which is very important when you're a junior, reliant on news flow and getting success. For the main part of this presentation, I want to talk about is what we have up for the next 12 years, or sorry, 12 years. Hopefully we're all fat, dumb, and happy by then. Next 12 months for Dreadnought is going to be extremely exciting. Starting off this year, what we're looking at right here is a bit of a bubble charts, some of our targets that we have. Like I said, we're an exploration company, so we're here to generate targets and test those targets, identify hopefully a resource, get some value in that, and either develop that or essentially crystallize value. And at the bottom, what we have is a timeline throughout the year. One of the things that we do to balance that target generation and target testing is also making sure that we have a steady flow of constant news flow that matters to the market. So this year, oh, wrong button. All right. Starting off, last year, the company was essentially floated a lot on this Kimberley project. It's up in the north. We've done a lot of target generation work. We have some very, very attractive targets up there. We have about 3 more we're going to be putting out from Orion in April when we do some fixed loop EM over some VTEM anomalies. And once it dries up there in May, June, we're going to be getting up there and unleashing that backlog of extremely exciting targets of nickel, copper, platinum, palladium, also some copper, gold, and some VMS targets. We'll go through those targets in a minute, how attractive they are. In the meantime, we're heading back out to Alara, where we have some unfinished business at Metzke's. We have finished a program last year, and we have to finish that off. We also have some exciting targets, Longmore's Find, Black Oak, Bald Hill. This morning, we put out an announcement on Lawrence's Corridor, which is going to generate a lot of new targets for us. And while we get the rigs out there at the end of this month, we'll be drilling what we haven't even defined yet at Lawrence's, because we're pretty sure we're going to have some really nice targets there as well. Our new projects at Mangaroon, if all goes well, we have some very attractive high-grade gold, a nice historical story of why this place has been unloved for so long, which are projects that I sort of like and very particular to. And what's emerging as hopefully a nice new nickel copper PGE intrusion, which we'll talk about a bit towards the end. If all goes well, we'll have that ready for drilling at the end of this year as well. So a lot of news flow, a lot of targets to test, and a lot of these targets are really attractive, and so we'll go through over the next few slides. Starting off with the Yilgarn, everyone's seen the map like this. Every greenstone belt should have a major gold deposit. A few years ago, Gruyere wasn't out there. The Alara project sits in what I call the Bermuda Triangle of the Yilgarn. And if you go back to the records, historical train lines, access, you look at fresh groundwater sources, you look at any of these sorts of data sets over the history of Western Australia, and really that Bermuda Triangle was outside the stretch of where most people could get to. It's a very isolated area. There's not much fresh water, and it was always a long hike from the closest train line. So it's been unexplored for a very long time, so there's no reason why there shouldn't be a nice big gold deposit sitting there, and we'll be doing our work to see if we can't find one. The The Alara Gold Project we acquired from Newmont in 2016. Obviously, they thought the exact same thing. They were generous enough to do some first pass sampling, which identifies these big corridors, the fluid flow pathways that you're looking for within the greenstone belts. Some work published recently by John Hronsky and company that talks about once you find these fluid pathways, you tend to find multiple deposits. And so a lot of the exploration work that Newmont does and what we've jumped on the top of is identifying these early fluid flow pathways as quickly as possible and focusing our exploration efforts there. Two of those that lit up very early on was Metzke's corridor and most recently the Lawrence's corridor, where we've just done first pass soils on. Metzke's find, high-grade gold, narrow vein, some very attractive intercepts there. We're currently trying to figure out where it's going to be plunging. And it's important to note that as far as Alara goes, completely not off limits to exploration, that's the Kimberley. What we had at Alara was an area that was locked up by the iron ore explorers from 2000 all the way through. So you had Bre-X, you had the fallout and gold exploration. This Bermuda Triangle of the Yilgarn fell onto iron ore explorers' hands, and which is benefiting us a bit at the moment, hopefully. And what we have seen is there's not been much gold exploration. So Newmont was the first group to get out there. We're coming back in on the backside of that, jumping on their shoulders, doing the target gen and target testing, and hitting a few goals early on. It's important to note that regionally across this greenstone belt, only about 25% of those anomalies in areas of interest have had any first pass soils. We have just completed, with the help of XM Logistics, regional soils over that entire area, and we're looking forward to seeing what comes out from a lot of those prospective gold and VMS trends. Metzke's corridor itself, Metzke's finds, has given us some high-grade intercepts. It also gives us a nice early place to get our eyes in for what the gold systems look like within the Alara greenstone belt. So we take that information, look at the soil geochemistry, the structure, the magnetics, going to be trialing some SAM surveys out there, and we can learn all that information, feed that back into our targeting, and continually develop more and more robust targets to go out there and chase with our drill rigs. We have some unfinished business there, figuring out which way that mineralization is plunging. We got the rig showing up on the 25th of February, and we'll be finding that out. While it's there, we'll also be at Longmore's find, where we recently hit 100 grams per ton, twinned that hole, wasn't there. The veins were cutting across the core, and we're thinking that potentially that the veins are running in the same direction as we had drilled previously. So we're swinging that around and see what's there. We'll find out very shortly. Black Oak, putting more holes into Black Oak, some thick oxide mineralization in the first program. This program we're following back up, testing that anomaly along strike and drilling a lot deeper. So wider space fence line, deeper holes. Try and find that mineralized structure. In Bald Hill, the first holes we put into that anomaly at the north end of the Metzke's corridor, where we have outcropping quartz, silver, and gold veins, chasing that undercover. Lawrence's corridor, I'd like to take a moment. This is what we announced today. These two images, the Metzke's corridor and the Lawrence's corridor, are at the exact same scale. So the tenor and the coherentness of the soil anomalies at Lawrence's is certainly better than anything that we've seen at Lawrence's at the Alara Greenstone Belt to date. There's a old digging at Lawrence's find. We had some rock chips down there at 54 grams per ton. There's two drill holes scissoring that from the 1970s, and nothing else along the entire 6 kilometers of that strike. There's a big intrusion sitting right in there, and a couple other intrusions sitting along that big structure. We've completed, in the process of completing the infill soils. We expect to have the assays back from Lab West to the ultrafine soils very shortly, and expect to see a lot of news flow out of Lawrence's as we rush this to get it drill ready when the rig's on site in March. Iron ore, worth noting in the background, we're surrounded by the very well cashed up MinRes, recently floated Juno. There's iron ore developers and miners in this area. Iron ore is worth a lot of money at the moment, and will be worth a lot of money to them. So watch this space. Moving on, our Proterozoic copper gold projects. So this now encompasses the West Kimberley and our new Mangaroon project. Proterozoic mobile belts are very attractive jurisdictions, looking for different styles of mineralization. Also you have things like Nova Bollinger, Winu, Telford, Nebo Babel, all sorts of these beautiful sort of deposits, elephant country, very exciting things to go after. Albany Fraser and places like this is undercover. It's very expensive. It's a graveyard for a lot of juniors. Hopefully IGO has continued success out there over the coming years. Places like the West Kimberley and the Gascoigne, it's sticking out of the ground. And we have some quite exciting early stages of mineralization to showcase there. Starting off of Taraji and the Kimberley, the heart of our project in the West Kimberley is the Taraji-Yampi area. All of this ground is within the Defense Reserve. The Defense Reserve was put in 1978 and was off limits to all exploration within the state until 2013, when Tim Clifton drew money in a group of others, pegged that ground, which Paul Chapman and subsequently Dreadnought gained control over through a joint venture agreement. We subsequently added the rest of Yampi to that land holding. The last people to do exploration, the last person to do exploration at Taraji was the late Roy Woodall himself, legend and inspiration to all of us who dream of exploration and discovery. Was out there in 1958, straight back when he was back from the United States. So we're the first people to be boots on ground since Roy Woodall in 1958. There's mineralization sticking out of the ground. It's a very, very exciting prospect. I explored once in Myanmar and in a few other different places. You think you have to go to those countries to get these sorts of opportunities. And here it is in Western Australia, untouched since the 70s, since half of all the mineralized deposits in Australia have been found. And we're the first movers, the first ones to be on the ground. And that's a very exciting prospect for us. So I'll talk about our targets as we go up through here. We have Texas and Orion, which we'll start off with. This is what IGO is chasing, the old Buxton ground, and also Chalice next door. You have Texas, which is sitting within ruins dolerite. We have a coincident EM and mag anomaly ready to go. That drill rig will show up with Hagstrom, hopefully, in May, end of May, start of June. And we'll finally put an answer to what that is. In April, we'll be going up and looking at Orion. Orion's another thick ruins dolerite. Some VTIM anomalies there, some 3 areas that we'll be doing fixed loop EM over in April. So expect to see some new drill targets coming out from that in the coming months as well. After the rigs finish there, they'll move down to Fuso and Paul's Find. So all around this area, you have these outcropping veins of copper, gold, cobalt, silver, and antimony. You look at these rocks, you look at their signature. We've shown them to a lot of experts and they've all come back and said similar things. This looks like Mount Isa, this looks like Tennant Creek. So the question is, those veins are sticking out of the ground because they're veins. Where's the breccia pipe? Where's Ernest Henry? So when we had the ground in 2019, we flew a detailed mag survey. We then went in, looked at those intense magnetic anomalies, did ground gravity, and lit up 2 very attractive targets early on, one of which is Fuso, 1.5 kilometers wide, with a coincident gravity anomaly right in the middle of a DMAG central point. And they have Paul's Find, which is an intense remnant magnetics low, with a coincident gravity high sitting right in the middle of it. These things are classic copper gold targets in this sort of setting. They're undercover. Looking forward to drilling them. Doesn't mean they're mineralized, but I'm really looking forward to putting a hole into those. Chianti Rufina, 7 EM targets. We have a confirmed VMS system that we drilled in 2019. While we were out there, we defined 7 more EM plates. We'll go out there and put a hole into each of those and see what comes up. And last but not least, our new project, Mangaroon. Come by the booth and talk about it some more. We have some nice rocks there to show off. We do have some confirmed magmatic sulfides in that 3-phase. We have chalcopyrite, pentlandite, and pyrrhotite. This is a previously really unmapped, unrecognized intrusion that runs about 50 kilometers long, 800 million years old. It's the same similar age and scale of intrusion to Jinchuan. The tenor of the sulfides are similar to Eagle. If there's a massive accumulation of those sulfides, we will find it and we will drill it come September. In addition to that, some really high-grade gold floating around there as well, and we look forward to drilling those too. So takeaway message, we have over 20 targets ready to go to be tested this year. We have them spanned out. We're going to produce lots of news flow, generating and testing those targets. We're first movers in the Kimberley and Mangaroon. Alara, we have an entire greenstone belt gifted to us by Newmont. We have an experienced management team and a modest market cap leverage for success. So we look forward to keeping you all well informed of what's going on and handing over to our IGO and Oz Minerals, billion-dollar companies, which hopefully will join you in a couple of years' time. Thank you all.
Paul Polito has 27 years of exploration experience in both industry and academia, and he's been with IGO for the past 5 years, where he's been the exploration project manager for the Fraser Range Nickel Project, leading a team of talented explorers who are passionate about finding more Nova Bollinger type ore deposits. In mid-2020, Paul added the role of Patterson Range to his project management portfolio, but recently he's moved into the key position of Chief Geologist across IGO. He's talked to us today about IGO's exploration portfolio results from the recent past and IGO's exploration strategy and plans for the immediate future. Please welcome Paul.
Thank you very much, Jerry. Let's see if get something up here. Not yet. Straight to our disclaimer. Look, thank you very much for coming along and listening to what IGO has to say about its strategy and what we're doing in the exploration state. Here's our cautionary disclaimer. Accidentally paused, I don't expect you to read that, or our competent person statement, but this presentation is on the website and you're welcome to download it and go your heart's content to read it. Before I start, I just want to talk about IGO's strategy. And our strategy defines what we do and how we go about doing things, and how we frame our growth and culture at the company. Our strategy is focused on metals which are critical to the clean energy revolution. And IGO are of the firm belief that there are three metals in particular that are going to take or benefit the most from this clean energy revolution. And they're nickel, copper and lithium. And I'll talk about those in just a moment. Part of our strategy is that we want to be a globally relevant company, mining large mines with high margins. We want to produce quality products that are highly desired by our customers. We want to be vertically integrated. We want to be bringing our mines, our upstream mines into our downstream processing plants. And we want to be proactively green. We don't want to just be mining the green energy metals. We want to be producing them in a green and environmentally friendly way. And finally, our people. If it's not for our people, our strategy really doesn't mean a whole bunch. And all of the people that I work with, all of those people that I know, come to work each day believing that they will make a difference at IGO. I mentioned a moment ago that our three metals that make up our strategy are lithium, copper and nickel. These metals are going to be very significant when it comes to the green energy revolution. And IGO's interest is in particular the electric vehicle side of that revolution. That particular growth in the electric vehicle space in particular is set to grow by about 18% per year over the next decade alone. And just before I move into the exploration space itself, I just want to touch on our financial results that were presented most recently. IGO is in a fantastic place right now. Both its Nova and Tropicana mines are producing a high free cash flow with earnings in the first half of financial year 21 in the order of about $200 million. Many of you would be aware of the recent transaction that IGO has announced with our purchase of an asset at Greenbushes through the Tianqi Lithium Corporation. That particular transaction is around $1.8 billion. And just before Christmas, we raised $766 million as part of that transaction. That transaction is due to complete at the end of the June quarter, and I won't be talking much about lithium or Greenbushes from here on. So let's talk about exploration in particular. IGO has an enduring commitment to exploration and discovery. The strategy in exploration hasn't changed over the last 3 or 4 years, and our budget has been maintained for the last 2 years at around $65 million. For those of you who've been following IGO over the last 4 years, you would see our portfolio grow from a few tenements in the Albany-Fraser Range to over 80,000 square kilometres across Australia. In the Patterson, the Albany-Fraser Range, as I just mentioned, the Kimberley, 2 projects in Northern Territory, 1 in South Australia, and 1 not shown here in Greenland. Our key focus in exploration right now is in the orthomagmatic nickel space and the sediment-hosted copper space. In the orthomagmatic nickel space, our projects are the Fraser Range, Kimberley, and Raptor in Northern Territory. We're well positioned and the dominant tenement holder in the Fraser Range and the Kimberley. And recently being 2019, we identified and acted upon an emerging nickel opportunity over the Wollura Gravity Ridge in Northern Territory. And we pegged that ground, called it Raptor. In the sedimentary hosted copper space, we're well positioned in 3 key belts: the Patterson, Copper Coast in South Australia, and Frontier in Greenland. In these areas, we're continuing to build our land position, and we're bringing new ideas, particularly in the sediment hosted copper space, and new tools to the projects that haven't been used in the past. Just focusing on the Fraser Range to begin with, IGO has over 12,400 square kilometres of tenure in this area, and we're continuing to generate and test several high quality targets each year. The map on the right-hand side shows all the prospects that IGO generated in late 2019 and drill tested in 2020, or are set to drill test in early 2021. We use deep penetrating EM squid technology combined with air core drilling to generate the targets, and we use diamond drilling to test all of our targets. We have a strong pipeline of targets to follow up, and I'll talk about that in just a moment. We do a lot of collaborative research with the universities of Western Australia and Curtin University, and when required, we also engage CSIRO. We bring along our joint venture partners on all of our research opportunities because we believe that the learnings that we make together will be applied in the discovery of nickel and copper opportunities into the future. And we're very pleased that being the dominant landholder and an active explorer in the area, we seem to be the joint venture partner of choice. And recently we've done deals with Boadicea and Matsa Resources adjacent to the Nova mining lease. When it comes to generating targets and projects to drill, IGO won't be able to find any nickel or copper mineralisation if it can't find mafic and ultramafic intrusions. In the last 3 years, using wide-spaced air core drilling alone, we've generated and found over 600 mafic and ultramafic intrusions. Any one of those intrusions could be part of a much larger mafic ultramafic complex similar to the one that hosts Nova Bollinger. To generate or be able to prioritise which of those targets we need to follow up first, we've generated a mafic prospectivity index and identified 153 targets that have a very strong or a strong MPI similar to that hosts Nova Bollinger. Another 200 have a very high probability of being similar to that hosts Nova or Bollinger. All of these intrusions will eventually need to be followed up, so our pipeline extends into the several years. If I just talk briefly about 2 of our main targets. The Orion target has now been around for probably 12 or 18 months. Some of you may have heard Purdy Bradford or Ian Sandel talk about these in past conferences. Orion is a chonolith or tube-like intrusion. It's 1 kilometre long by about 50 to 250 metres wide. We're particularly excited about this because it's associated with an eye feature all of its own that you can see here in the 3D seismic image on the left-hand side. To the southwest, the Orion chonolith is more of a mafic composition, but as we migrate to the northeast, it becomes more ultramafic in composition. The sulfide concentration increases and the tenor of those sulfides is better or at least equal to what we're finding at Nova Bollinger. So we're really looking forward to getting on the other side of that tenement and finding out what's over there. 9 kilometres to the southwest of Nova, IGO recently identified the Chimera project. This was one of the targets generated by one of those air core drill holes back in 2019. In 2020, we conducted 2 air core drill programs over this target, infilling first at a 400 metre spacing, then at 100 metre spacing. What we've found in almost all of the drill holes is 3-phase disseminated sulfides, as indicated in the cross-section up here. And particularly within the ultramafic rocks, we're seeing nickel and copper concentrations that are at least as good as those that we identified over Nova prior to its discovery. The results of that drilling will be released in our mineral resource estimate coming out before the end of this month, hence they're not shown up here. And some of you would be following what's happening in the gold space, and even though it's not part of our strategy, we can't help but find it in one of these areas. Our Gazelle Gold project, which some of you may have heard of through our joint venture partner Rumble Resources, headlining 16 metres at almost 7 grams per tonne gold at our Themis prospect, is actually very interesting. It covers an area of 20 kilometres by about 8 kilometres. It's almost all paleochannel hosted, but we want the primary source, and we wanted to know whether the gold grains are actually coming from the Yilgarn some 100 kilometres away, or whether it was coming from a local source that we should be following up. A research project that we conducted in collaboration with Curtin University identified that many of the gold grains are indeed primary forms, having block, crystal and rod-like shapes with very angular edges, as you can see here in the feature. Our researchers have assured us that these grains are coming from less than 500 metres away from the paleo channels within which they were found. So no doubt we'll be back there this particular year. Switching over to the Kimberley, IGO has managed to consolidate over 13,000 square kilometres of tenure in a very short period of time in the East and West Kimberley. We're well positioned, covering as much of the ultramafic and mafic rocks as we've been able to get our hands on. In the East Kimberley, you've just heard how much exploration hasn't been done over there in the last few decades. And IGO is part of a new group of explorers, and we've been flying new and detailed airborne geophysical surveys, particularly over the West Kimberley, to generate that next generation of targets. IGO is in a particularly lucky position. We own the De Beers collection of heavy mineral concentrates and geochemical data set. Almost 6,000 of those samples come from the Kimberley, and we're looking at those in earnest for the first time. And I'm very pleased that our first look at those samples is identifying pentlandite, chalcopyrite and pyrrhotite in a handful of those samples in areas where where there's no mineralisation currently known. On the East Kimberley side, IGO is taking a more meticulous approach to the available historic data that's out there. This is an area that's been explored for over 50 years. And what we're finding is that a lot of the data that exists may not have been looked at as thoroughly as perhaps it was due. IGO has also put together a large private stream sediment database together with its own proprietary De Beers geochemical database and the GSWA open file data, and probably has one of the largest or the largest sediment hosted or stream sediment geochemical databases to look at. What we've found early on is that a lot of these data points were translocated up to 2.5 kilometres from where they actually came from. Remember, a lot of this data was collected before GPS. So we've gone back and been able to re-find gossans that were reported back in 1970, been lost for almost 40 years. And most of those have no modern airborne or ground EM surveys completed over them. In the Northern Territory, IGO is a first mover and over a belt scale project. It's targeting the coincidence of craton margin and belt scale anomaly, and we pegged over 17,000 square kilometres of tenure in this area. Historically, the area has seen a lot of extensive shallow drilling, but almost all of that drilling was analysed for gold and arsenic only. In the very rare occasion where base metals were also analysed, we've been pleasantly surprised by how many are showing up copper and nickel anomalies, with one particular standout drilled by Sons of Galia in the 1990s of 4 metres at 1.4% nickel and 0.2% copper. We've just completed an airborne aeromag survey over this area in collaboration with the NTGS, and we're interpreting that data now. Switching over to sediment-hosted copper mineralisation, and I'll just talk briefly about the Patterson project. IGO is bringing new ideas into this re-emerging belt. We have joint ventures with Encounter Resources, Metals X and Antipa Minerals. We have almost 7,000 square kilometres in this area, and we're there to find a tier 1 deposit similar to that like Nifty or Telfer. The recent discoveries of Winu, Javieron and Calibre highlights to us that the area has been underexplored and is poorly understood. And indeed, in the few months that we've been active in this area, we've found that many of the historic drilling, or percussion drilling in particular, in the area has been shallow, and most of the drill holes didn't penetrate through the cover sequences. In fact, probably 80% of those holes weren't able to get through the silicified Permian cover that's demonstrated in the top photograph here. IGO, in collaboration with its long-standing drilling partner, has been able to work out how to get through this. And in areas where we were drilling maybe 30 metres in the past and stopping before we reach basement, we've been able to get up to 120 metres. We're completing magnetotelluric imaging to understand the stratigraphy and the structurally important faults in the area. We're doing soil geochemical surveys using ultra-low detection limits for the first time in this area, and we're identifying anomalies that haven't been discovered in the past over known mineralisation. And we're looking at drill core drilled up to 40 years ago that has never been analysed, never been spectrally assessed, never had any petrophysical data collected from it. Lastly, in South Australia, we're testing a conceptual model-driven target looking for tier 1 sediment-hosted copper deposits, similar to that you might find in the Patterson or in the Congo. It's located along the eastern margin of the Torrens Hinge Zone. We're targeting mineralisation in the Neoproterozoic sediments, and we have 7 tenements covering over 7,000 square kilometres in this particular area. In 2020, we completed gravity and magnetotelluric surveys in the area and identified sub-basins and translithospheric faults that are important if you're going to be finding more sediment-hosted copper mineralisation. We've reviewed historic drill holes dating back to the 1970s, hosted in the Geological Survey of South Australia, and been finding that sediment-hosted copper mineralisation actually exists in most of those drill holes at thicknesses ranging from 1 to 15 metres. So in conclusion, I just want to acknowledge our fantastic team of geologists. It's a diverse team, it's a young team. They come with broad skills and open minds. Almost none of them came to IGO with orthomagmatic nickel or sediment-hosted copper experience, but all of them are keen to learn, and they are learning rapidly, and they're teaching each other what they know. IGO is generating strong free cash flow, and as we're using that cash flow to fund the exploration that we think will make that next discovery. Our board and our executive team have an enduring strong commitment to exploration and discovery, and we believe that our best-in-class team and portfolio of projects is delivering high-quality discovery opportunities for our shareholders. Thank you very much.
Thank you, Paul. Jim McKinnon-Matthews is an exploration geologist with over 25 years global experience in mineral exploration and project generation with both major and junior ASX-listed companies. He's also held a number of director roles in both public and private unlisted exploration companies, and he joined Oz Minerals in early 2019 as principal geologist and is responsible for the company's Australian exploration. Please welcome Jim McKinnon-Matthews.
Thanks very much. Well, it's been an interesting year for everyone, I guess, and it's great to be able to get up here and speak personally instead of in front of a computer screen. I'd just like to thank Vertical Events for persevering and putting this presentation, this conference together. I guess today is going to be a little bit of a variation on the theme of the previous presentations today. It's more about giving a snapshot of where Oz Minerals is at the present time, because Oz Minerals is, I guess it's South Australian based. We are a mid-cap company, and I guess I've been surprised over the last couple of years coming to this conference about people, I guess, not really knowing who Oz Minerals was and what we're about. So I guess that's the aim of this presentation. I guess Oz has come back on the scene a bit more in Western Australia since the 100% acquisition of the West Musgrave project in the eastern part of the state. The standard disclaimers, I hope you've read that in detail, and also some compliance statements which I was asked to also put in, because I will be talking about some of the production targets at Carrapateena. I guess who is Oz Minerals? We're Adelaide based for a start, which is fairly unusual for a mining company of our size. The strategy and culture is pretty much revolves around all of our stakeholders. That's not just our shareholders, but our employees, our suppliers, the community, and also government. And what's underpinning this is probably how we work together principles. You know, again, on partnering and investing responsibly, being very agile, and I guess everyone's had to pivot this year. It hasn't been an easy year, but I guess, you know, I joined Oz Minerals 2 years ago, and talk about agile, you have to move pretty quick. Where are our operations, where are our projects? As I said, our base is in Adelaide in South Australia, and that makes sense because we've got two of our main operations there, being Prominent Hill and Carrapateena. We've also got an operation in the Carajás with our Antas mine, and that was a result of the takeover of Avanco about 4 or 5 years ago. We've got other projects, many other projects in exploration projects within Brazil that are that I'll talk briefly on some of those later on in the presentation. We've actually got a gold project in Brazil as well, which is at the study phase, and that came out of the Avanco deal as well. Number of exploration projects throughout Australia and also up in Sweden. Just wanted to highlight the growth pipeline for Oz Minerals, and I work from right to left. Prominent Hill has been around for a while. Mining started there about 12 or 13 years ago, and it's been a very constant producer at a very, very low cost. The current mining there is at about 4.5 million tonnes a year. Carrapateena has just come on stream. That was I remember going out to Carrapateena 2 years ago when I first joined, and I remember thinking to myself, there is no way they're going to get this up, get the infrastructure put in here, because there was none. Get the infrastructure and the mine up and running within 2 years, and they did it in 18 months. There's the Antas operation, as I mentioned before, and that's currently getting fed from through the Antas project, as well as through some supplementary ore from Pedra Branca. In the study phase, there's a number of different projects in a number of different provinces, ranging from Nebo and Babel in the West Musgraves, Centro Gold, as I mentioned earlier, and also there's a big plan for Carrapateena in the future with block caving, and that's something that we should all keep in mind. There's as well as Carrapateena, not far from Carrapateena is Fremantle Doctor, which is an IOC deposit in its own right. That's 2 kilometres to the north. And then we've got the Camson deposit, which is out to the west, about 10 kilometres west of Carrapateena. And a bunch of exploration projects scattered throughout Australia, primarily through joint ventures, and I'll touch on those later on. I guess just a bit more detail on the operating assets. Prominent Hill, it's an IOCG deposit. We've got 10 plus year mine life at the moment, and there's a current expansion study underway. And the expansion study is to basically install a vertical shaft and increase production, access the ore beneath the existing infrastructure. There was a release late last year where the total resources remaining at Prominent Hill is 130 million tonnes at 1.1% copper and just under a gram gold. Carrapateena, as I mentioned, it's just came up, hit the planned production rates late last year. Currently, it's a 25-year mine life. The 2020 production was just under 30,000 tonnes of copper. That will increase, and 50,000 ounces of gold. And yeah, the expansion study is underway to convert that to a block cave. And just bearing in mind that Carrapateena alone, the total resource base there is 950 million tonnes. And then we've got the Carajás province in Brazil. which is Antas North Mine, where the processing facility is, and that's currently getting fed by both Antas and Pedra Branca. Yeah, compared to Carra and Prom Hill, production is low, but we've got a hub strategy there. There are a bunch of smaller prospects and deposits in the area that the idea is to just keep the mill full with these projects that are around within trucking distance of these of Antas. I guess with Carrapateena, and I did actually pinch this pretty much directly from the quarterly report that came out last month. Just shows that currently we're in the sub-level cave with Carrapateena at about 4 million tonnes a year. That's going to quickly ramp up, and once we get into the block cave, it's going to be at up to 12 million tonnes to produce about 110, 120,000 tonnes of copper and 110, 120,000 ounces of gold. And it does actually create a world-class opportunity with its scale, production, mine life, and the cost base. Because once you get into a block cave, you're talking about open pit costs for mining. And just, yeah, so this actually goes out to 2045, but as I mentioned, that's the first 200 million tonnes. I guess the pipeline of advanced projects in the study phase. I'll start with Centro Gold. There's 28 million tonnes at just under 2 grams, and that's an interesting deposit. It is Proterozoic greenstone gold, but it is actually within the West African Craton, which is just a portion that peeled off after the rifting from South America and Brazil. So a lot of those West African gold deposits are actually related to the mineralisation and the style of mineralisation at Centro. Pantera is another IOCG deposit in Brazil, and that's too far to truck to Antas, so that will be its own processing hub. And there again, we have a number of prospects in that region that will form its own little hub strategy within that. And then there's the West Musgrave, which is front and centre at the moment. We started drilling back there. We started drilling last month to get to an equivalent of a DFS stage. The current inferred and indicated inferred resources there are sitting at 390 million tonnes at 0.31% nickel and 0.34% copper. And I guess your first impression is it's low grade. Oh, yes. But convert that to copper, that's 390 million tonnes at 1% copper, open pittable. And the feasibility study that came out in December is we're looking at a 12 million tonne per annum deposit. And none of the work that's gone into the feasibility has actually included Sukhoth or any of the other advanced prospects in the area. So just a quick summary of the West Musgrave project. Many people in this room will know it a lot better than I do. I went out there once with Western Mining about 20 years ago, and I think it was 2001 it was discovered, and I'm sure Rob Wall will rip into me if I got that wrong. It's located in the Nanyatara Aboriginal lands in central Western Australia. We acquired 100% of it after taking over Cassini Resources in a friendly takeover in September last year, and we quickly went through to do a recent study update, which gave it a mine life of 26 years and some very, very good numbers at the end around the NPV. And I'd encourage you, if you're interested, to read our latest resources and reserves report, which came out a few months ago. As I mentioned, the indicated resource there is around 310 million tonnes and good metallurgical recoveries. Now, this is not like your low-grade nickel sulfide deposits in the Yilgarn with komatiites, where you've got a lot of silicate nickel. There is very little silicate nickel in these deposits. There's an 80-person camp now on site, which is fully operational, and drilling commenced on the 18th of Jan. And again, we expect to get to a decision point in 2022 on whether we press the button. And I guess one thing as I mentioned earlier with Carrapateena, once the decision was made to go, it went really quick. So if Oz does decide to press the button on the development stage, you'll see it happen very, very quickly. And there's a link down the bottom to a 3 or 4 minute video if people are interested on YouTube. It's just basically where the it was made late last year. It's on the West Musgrave project, so I'm sure you can access the presentation from Vertical Events. I guess as far as discoveries go, with further left we go on that the growth pipeline that we saw earlier on. Clovis in Brazil was a recent discovery. That's structurally controlled massive sulfide. As you can see, it's pretty nice looking stuff. It's again, it's probably not going to be huge, but again, it's one of the examples of the deposits that we've got very close to. Well, it's not actually a deposit. It's undergoing significant work at the moment, but it's going to add to our hub strategy around the Antas. And resource drilling is ongoing during 2021, and there are a number of other prospects in Brazil which are going to go through the same phase this year. Jericho. Now Jericho was we've got a joint venture with Minotaur Exploration up in Queensland in the Mount Isa province, looking for IOCG and shear-hosted copper gold mineralising systems, and this was actually discovered with Minotaur and Oz Minerals jointly discovered this in 2017. And again, Glenn and Louise are in the audience here from Minotaur, and I'm sure I'll get a ribbing if I got that wrong as well. And I guess it was just a different look at just thinking a bit differently about where potentially mineralisation could occur, just taking a different spin on it. And it was looking at the host rocks and what methodologies you would use. And it was systematic ground EM in a covered terrain with 50 metres of cover over what was interpreted to be the right rock types. And lo and behold, we found Jericho, and this is operated by Minotaur, and a lot of the technical work was done by Minotaur as well. So that was a good discovery, and last year we released a resource, a modest resource there. What it has done, it's actually opened up quite a big exploration space in that part of Queensland for us. So we're continuing to do that work in 2021. I guess you move on to the earlier stages. You've got, as I mentioned, our joint ventures. This is the way we like to operate, because we see our joint venture partners as having the technical expertise as well as the operational expertise in each jurisdiction. So by doing that, what we can do is we can keep a very, very small team in the corporate office that oversees and helps generate targets, but mainly has an overseeing role with the joint venture partners. And for example, in Australia, we've got a dozen projects on the go, 4 of which we operate 100% ourselves. The other 8 are through joint ventures with Red Metal and Minotaur. And we've got 6 geologists, 2 of which are graduates. So it's a very, very lean team, and we cover a lot of ground. We are continually assessing new projects, as everyone else is in this room, and everyone's looking for the unicorn. But we look at projects from the earliest stages right through to advanced. One thing after joining Oz was they think and they act differently. It's not your traditional exploration. That does form part. It's not solely the traditional exploration. And I think a number of you might be aware of the advances or the data science and machine learning work that Oz Minerals is doing in the background. That's primarily around exploration. And there's a few examples here on where we've what we've done. And this is basically crowdsourcing, putting data to the crowd and just seeing what falls out. And this has resulted in the $1 Million Explorer Challenge prize money, the Copper to Cobre, Drillanthropy, which is a big initiative that we're pushing. Anyone with a data-driven target, just log onto the site and plug it in, and we'll certainly assess it and get in touch with you, and happy to talk through the project with you. And then another one called Total Recall, which is coming out in the next few weeks, and using existing pulps to be able to predict assay results, as well as other things. So I guess in summary, we measure ourselves in how we can create value for all our stakeholders. We have got great assets, and that's what struck me when I first joined them. And they do have a long life operations, and we're not afraid to try new things. And we do fail, but we fail fast and we move on. Thanks very much.
Okay, I'm running 12 minutes behind now, so you'll be back whenever you hear the bell being rung.